Do you find it hard to understand what's happening with your paycheck and taxes? In this video, I am going to help you understand the types of taxes that should be withheld from your paycheck, such as federal income tax, Social Security tax, Medicare tax, and I am also going to show you how to calculate your net pay after taxes and other deductions and explain to you why it's important to complete a W-4 form every single year and to do it the right way. Before we jump in, don't forget to like, comment, and subscribe so you don't miss out on any of this game-changing information. And if you watch until the end, I am going to show you how IRS can tax block your paycheck. So I need you to really watch so this doesn't happen to you. Now, let's get after it. Understanding the different types of taxes that come out of a paycheck can really be overwhelming, but it's so important. You gotta know how much money you're gonna be bringing home and what should come out of your paycheck. So what comes out of your paycheck is about 4 types of taxes. Federal income tax, which is the money that gets paid over to IRS, your federal withholding. Social Security tax comes out. Social Security tax is what we call Social Security and Medicare. Social Security is separate from the Medicare piece. Social Security tax is paid into the system so that later on in life, you will be able to draw on Social Security. Now, I didn't say Social Security was gonna be here, so don't be putting comments telling me that. I am just telling you what Social Security tax is. Your employer pays half of your Social Security tax. So when you see that Social Security tax coming out, that exact same amount, your employer is also paying on your behalf. So realize that they are also funding your retirement. The other tax that comes out of your paycheck is Medicare tax. And Medicare tax has no limit. It's gonna come out of your paycheck whether you make 100 grand, 200 grand, or 3 million. It's always going to have to be paid. Medicare tax is what's going to fund your health insurance when you get age 65 and over. The Medicare tax rate is literally 1.45% on your wages. Now, if you're in a higher income tax bracket, there's another 0.09% that is added on to that. But realize that is for your future health care, and that is important for you to have. The 4th tax that comes out is the state income tax. Now, some of you may not be in taxable states, like Nevada. That's not a taxable state. Florida's not a taxable state. Therefore, you're not gonna pay state income tax. But some of us that are in taxable states like California, we're gonna have our state income tax come out. Some of you may also have local taxes, like the state of Ohio has local income tax that comes out. Just depends on your state, depends on your municipality. But these taxes are mandatory. They have to come out of your paycheck. Federal income tax and state income tax are being paid into the system. So when you file your income taxes, you may get back a refund. You don't get refunded Social Security, you don't get refunded on Medicare tax, and typically not on local taxes either. How to calculate your net pay after taxes and deductions. And your net pay is your gross pay, the $8,333 per month if you're making 100 grand a year, less the tax withholding, the federal income tax, the state income tax, the Social Security, the Medicare, or any local taxes you have to pay. That's how you get down to your net paycheck. Now, if you have other deductions, for example, maybe you're contributing to your 401k, maybe you're contributing to a Roth, something of that nature, there also are going to be deductions that come off of your paycheck. If you contribute to a healthcare plan, maybe you have to pay out of pocket for it. Those are deductions that are going to come off of your gross pay to get you down to your net pay. So make sure you understand how to read that box 14 on your W-2 and understand your withholdings when it comes to calculating your net pay, because you don't want any employer to rip you off. Payroll is one of those areas where there's a lot of mistakes made in payroll. Trust me, because we clean it up every day for business owners. And you, the employee, needs to know whether or not your paycheck is correct. So understanding what needs to come out, what's essential, and what's not essential is mission critical. Having a contribution to a 401k is not necessarily essential, but having your contribution to your Social Security and Medicare, that is essential. You don't get to control that. So when you understand that, that can help you budget. If you need to take home more money, you're not going to be doing contributions to a 401k or contributions to an IRA. Or perhaps you need to adjust those contributions so you can bring home a little bit more pay. Pre-tax versus after-tax deductions. So if you are looking to lower your taxes, try to get yourself as many pre-tax deductions as possible. Allow me to give you an example. If your employer has you paying into your healthcare premiums should be pre-tax. That means if you're making $1,000 a month, your healthcare premiums should be deducted from that $1,000 a month before you are hit with income taxes. So if your healthcare premiums are $100, that means you're making $1,000 a month, less $100. Your taxable income is $900. So the income tax bracket you're going to be in for withholding is going to be based on you getting paid $900. That is a big tax savings for you. So making sure you understand pre-tax versus after-tax deductions is really important to making sure that you understand how to manage your finances. The other thing I want you to understand is payroll taxes actually fluctuate. When you hear our president on TV saying they want millions of Americans to bring home more money on their paychecks, that means they're going to cut the payroll tax tables down. That means that less money is going to be withheld out of your paycheck. But you know what that doesn't mean? It doesn't mean you're not going to be responsible for that same amount of income tax. Don't get confused between payroll tax withholdings and income tax being paid. Many of you think that it's the same thing, but it is not. Payroll taxes are based on the payroll tables. And yes, when you have federal income tax withheld, when you have state income tax withheld, yes, that does go toward your federal tax liability, but that doesn't mean that's all you're going to be responsible for. So when you see your paycheck fluctuating, all of a sudden you're bringing home more money, don't get confused because you still may owe that money come tax time. That's why it's so important to regularly monitor your paycheck deductions. Another item of importance, learn how to complete the correct W-4 form. A W-4 form is what you give to your employer to tell your employer what to withhold out of your paycheck. And when you're completing that form, it's important to understand, are you single? This doesn't mean are you dating somebody. This means are you married filing joint with your spouse? That is so important. Are you filing as head of household? Meaning that you're not the man running a household. What I mean by head of household is that you are going to be a single individual with a minor child on your tax return. That's what head of household means. So understanding terminology is mission critical. I get all the time when women come to me asking me how to fill out their W-4, and maybe they want to be head of household, and the husband will turn around and say, oh, but I'm the head of the household. That has nothing to do with it. Make sure that you understand that. When you fill out your W-4 form, you want to make certain that you fill it out accurately. Your employer is going to submit that W-4 form to IRS. And if it's not done right, you could be over withholding, paying in too much money, or under withholding, meaning you're not paying enough money, and then you end up owing at the end of the year. One of my strategies is use the IRS withholding estimator. I don't recommend you guys go to irs.gov that often, but they do have a great withholding calculator for people that are W-2. Go on to that website, check out that withholding calculator, get your questions answered appropriately so that your withholdings are accurate, and make sure that you review your withholdings every single year. If you review your withholdings and you realize that they are taken out too much, then you can always complete a new W-4 form and give it to your employer. You're never stuck. You can change your W-4 form as often as needed, but just make sure that you are looking at it appropriately. The other item I want to make sure that you guys do is understand the impact of changes in income and deductions and credits when it comes to your tax liability. Here's the thing. If all of a sudden you get a big raise, guess what? You're going to need to change your withholdings. You might think, well, shouldn't they automatically increase the amount of my withholding? Well, your withholdings will increase because your income has gone up. But something you have to be mindful of. Maybe you jump into a higher tax bracket. So maybe if you're normally getting withheld 10% or 20% every pay period, and your income has gone up and you're still only withholding 20% of that income, that might not be enough to cover your ultimate tax liability, because maybe you jumped up to 22%, maybe you jumped up to 25%. That's why it's so important to really understand how your income affects your withholding. But by the same token, your deductions affect your withholdings too. So if all of a sudden you're donating, all of a sudden you bought a house, all of a sudden you have another kid, and maybe you're going to get a child tax credit, you want to be mindful of that, because if not, you're going to end up with a big refund at the end of the year. And I don't know if you know this, IRS is not a good keeper of our refunds. We need to keep our own money. You really want to be at break even. You don't want to get a refund, and you do not want to owe the government. If you are a W-2 employee, and if you change your withholdings, and if you owe IRS 1 year, then you owe IRS the second year, IRS will send a letter to your employer and they will tax block you. What does that mean? That means that they will require your employer to put your withholdings at single zero, and you will not be able to change it. That's right. IRS will tax block you to make sure that you do not owe them again. That is why it's so important to understand why you need to monitor your W-4 on a regular basis, track your income, track your deductions, track your life changes, go to irs.gov, use their calculator, and you need to take control of your finances. And you know, my friends, when you know better, you absolutely got to do better. That is why you got to like. That is why you have to comment, and that is why I want you to subscribe so I can keep you updated on all things tax.